good afternoon. Today we want to look at the second topic in financial accounting, and this is the bookkeeping equation. It is very important that we record the business transactions for the purposes of determining the net worth of a business. A business unit is started by its owners so that they are able to increase their wealth by doing the business transactions. Then we also saw that transactions may be of diversified nature. We have retail transactions, we have wholesale transactions, we have import transactions, we have export transactions. So all these transactions involve purchase and sale of goods against any money consideration. So it is very important that these transactions are recorded adequately and accurately to find the net worth of any business. Now, to determine the net worth of a business, we need to understand the concept of the balance sheet as well as the items that go into the balance sheet, which is the assets and liabilities of this particular business. We start with the assets and liabilities. Assets and liabilities of any business enterprise should be equal to each other. We first look at what assets are, then we are going to look at what the liabilities are for any business. Assets here, we mean anything of value that is owned by a business. Anything that a business possesses and has value, then they are classified as assets. We have two main classifications of assets. We have fixed assets. These assets are retained for use in the business for a long period of time. That means we acquire fixed assets for the purposes of business operations. Examples here, we have buildings, we have machines, we have motor vehicles, we have furniture. All these are considered as fixed assets. They are obtained at the start of the business for smooth operations of the business. Then we have current assets. Now, current assets are short-term assets, or what we can talk of trading assets. These assets either are in form of cash or any cash equivalents. That means we can be able to convert them into cash within a short period of time. Like when we buy goods for resale, these are current assets. When we sell goods to our customers on credit basis, remember we talked about this, these are our debtors and they are also referred to as our current assets. So these current assets are used to meet the daily business requirements, to meet short-term obligations of any business when they fall due. Then we have liabilities. Liabilities here mean any financial obligations of a business. We also have two categories here. We have long-term liabilities and current liabilities. The first one, which is long-term liabilities, they are payable at a date more than one period. That means more than a year. So they consist of long-term loans as well as capital. So capital here also falls as a long-term liability because it is the owner's claim in the business and it will be for a long period of time. That means the capital has to be there in the business as long as it continues to exist. Then we have current liabilities. Current liabilities are payable by the business within a period of 1 year. So that means if we have any goods supplied to us on credit basis, we call these suppliers creditors. We need to pay the creditors within a period of 1 year. We also have other examples of current liabilities. We have bank overdrafts, any outstanding expenses, these fall as current liabilities. Now, for us to be able to determine the net worth of a business, we need to have a balance sheet. A balance sheet, therefore, may be looked at as a statement of financial position of the business at any particular period in time. So this balance sheet shows the value of the assets and liabilities of that particular business. There are two sides of the balance sheet. The first side, which is the assets, shown on one side and liabilities and capital on the other side. So these two have to balance. These assets and liabilities of any business must always be equal to each other. It means therefore total assets is equal to total liabilities as shown in our formula down there. We have looked at what assets are and what liabilities are. Now let us look at capital. Capital here refers to the claim by the owner against the business. That means any amount of money invested by the owner into the business, then this is referred to as capital. It may also refer to what we call owner's equity. Capital is used to buy assets such as machines, tools, equipments, all these for purposes of business operations. We have three categories of capital. As you can see here, we have equity capital. This is the capital invested by the owner of a business plus any profits that are accrued or attributable to the owners from business operations. The second type of capital is what we refer to as loan capital. Sometimes a business may acquire capital for the purposes of starting any business or for the purposes of expanding an existing business from a loan obtained from a financial institution. Then we have working capital. Working capital is the difference between the current assets and current liabilities of any business. We have learned about assets, liabilities, and capital. Now let us look at the bookkeeping equation, which involves these three items. The fundamental equation of any bookkeeping is the equality between assets and liabilities. It is important that these two are equal to each other. The resources owned by a business are what we refer to assets, and the liabilities are those amounts which are due to other people who have contributed to these resources. The resources provided by business owners are known as capital, and resources provided by outsiders are in form of loans or credit. So these are what we refer to as liabilities. So we know that both capital and liabilities will fall on one side, as you can see here, and assets will fall on the other sides. So if we look at the equation, you'll see that capital plus liabilities will equal to assets. So at any point in time, we can be able to find what capital is. So capital here, you can see it is the net assets. That means we look at all the assets minus all the liabilities, then we get what we refer to as the net worth of a business, which is equal to the net assets. The net assets of a business are therefore referred to as the net worth of that particular business. So we should always remember that the net assets of a business is the same as the net worth of that particular business. It represents the owner's claim on the business, and also it is referred to as owner's equity. We have looked at the balance sheet equation. Now let us look at an example and how we can be able to treat the transactions in the balance sheet. So we have our first example there. So the first example here looks at Adil Al-Alawi, who on 1st of January started a business and he deposited 20,000 into a bank account. The second transaction happened on 3rd of January. He purchased a motor vehicle for 5,000, and on 8th of January he purchased goods for resale for 3,000. So here we are required to show his balance sheet as at these three different dates. Remember, we said that the balance sheet of any business shows the financial position at any different time. So we are going to look at his position as at 1st of January. We're also going to look at 3rd of January and on 8th of January. So here we are, we need to look at how to solve this particular problem. To solve this problem, you need to draw a T format balance sheet. So we write the name of the business, which is Adil, the name of the proprietor, Adil Al-Alawi. Then we write the balance sheet as of that particular period we are requested to do. So here we will have 3 dates. So the first one will be balance sheet. This is how you write, as at 1st of January 2018. So on 1st of January 2018, you can decide that this side will be the capital and this other side, so your capital comes here. He introduced 20,000, right? And this 20,000, he opened a bank account and placed the money into the bank as cash. So 20,000. You can see that. So we have balance as at 1st of January 2018. So if we are to look at 3rd of January, it will be Adil Al-Alawi again, a balance sheet as at 3rd of January 2018. Remember, in the beginning he introduced capital, right? And the capital was 20,000. Then he had cash, okay? Then from the cash he bought a motor vehicle. How much was the vehicle? It was 5,000. So from the cash he utilized 5,000 to buy the motor vehicle. So the balance now is 15,000. So if we balance, you see that this side of assets, it will be 20,000, and this other side of capital and liabilities will also balance with 20,000. So you can see now, on 1st of January, he only introduced capital. Capital was 20 and cash was 20. Then on 3rd of January, he purchased a motor vehicle for 5,000. So the cash asset, you can see here, has decreased, and the motor vehicle, which is another asset, has increased. In the next video, we are going to discuss about the effects of transactions, where we can see one transaction affecting one asset of the balance sheet or affecting both sides of the balance sheet. So on the last day, we can see here, on 8th of January, we need to show the balance sheet. So he started the business with 20,000. The cash was 15,000. So he purchased a motor vehicle at 5,000. Then also he purchased goods for sale at 3,000. So that means our cash has reduced again. So our cash has reduced again. It was 15,000, but we're spending again how much? 3,000 to buy goods for resale. So that means here our cash will now be 12,000. If you add all this, you're going to balance with 20,000 again, and on this side again it will be 20,000 again. So this is how you're supposed to balance the equations. So for those transactions, the 3 transactions, we saw that Adil was able to introduce some money into the business as capital. Then he acquired motor vehicle. Then lastly, he was able to buy goods for resale. And at all these times, we are able to see the financial position of his business. Now, for the second example, let us look at the same proprietor, Adil Al-Alawi, but then we have several transactions, and this information is given for the period ending 31st December 2020. So we have capital. He introduced capital worth 25,000. He acquired an office machinery 20,000. A loan from a bank 5,000. Creditors were 1,000. He bought stock of goods at 3,500. Then debtors 4,500, and he had cash at the bank at 3,000. So we are required to prepare Adil's balance sheet as at 31st December 2020. Now, let us look at the balance sheet first. Then we can be able to look at the net worth of his business. So you need to have a plain area to write your balance sheet. So in this example again, so we have our T format balance sheet and we write there Adil Al-Alawi, and we write here balance sheet as at December, remember 31st December 2020. From the information we were given, he started with capital. So capital, so we look at the information given and we try to find out whether it falls under the capital and liability side or the asset side. So we have capital and his capital was 25,000. Then we know that he purchased an office equipment. Office equipment or office machinery falls under the assets. So here we are generally looking at just capital and assets. We are not classifying the assets as fixed assets or current assets, nor are we classifying liabilities and current liabilities. This is a session that we are going to do in the next video. So here we have office equipment or machinery, and this was 20,000. Okay, so the next item, we know that he had a loan, a long-term loan from the bank, which is at 5,000. Then he also had creditors. If you look at the question, he had creditors of 1,000. So the value of creditors were 1,000. Okay. On the other side also, we saw that he had stock of goods. So we write there stocks, and these stocks were worth 3,500. Remember, these are our assets now, current assets. Then apart from the stocks, he also had debtors, and these debtors were worth 4,500. And the last item, he had cash at the bank worth 3,000. So after this, we don't have any other transactions. So we need to balance and see whether our balance sheet will balance. So on this side, we have 25,000 plus 5,000 plus 1,000, that will be 35,000. And on this other side of the assets, we can also balance 20 plus 3,500 plus 4,500. If you use your calculator, you should be able also to get 31,000. Now, this is one way of doing the balance sheet. The other way of doing this balance sheet will be to classify into several categories as we have learned. As accounting students now, you need to classify the assets and the liabilities. So that means your balance sheet will be there. You need to write the name of the proprietor, the balance sheet as at December 2020. Now, from here, you need to classify. If we have capital here, so we are going to write capital there. And the capital is 25,000. Then the next item was office machinery, which is fixed asset. So we write there fixed asset. So now you are able to classify. So fixed asset, we have office machinery. How much was that? It was 20,000. So you can see that. Then the next item was loan, bank loan. Now, if it is a long-term loan, then this will be classified as long-term liability. Let me rewrite it. Long-term liability. So we have here bank loan. How much was it? 5,000. Then on the other side, we were told that he had stocks, debtors and cash. So all these were classified as current assets. So you write current assets there. Then you have stocks, you have debtors, and you have cash. How much was stocks? 3,500. Debtors were 4,500. That's 8,000. Then we have cash of 3,000. So all these adds up to 11,000. So you can be able to check your fixed assets 20,000, add it to the current assets, and you're going to get 31,000. Okay, on the other side, we had capital 25,000, long-term liabilities 5,000, and then we have current liabilities, which is here given as creditors. How much were the creditors? Only 1,000. So we add all that. As you can see, we are actually balancing at 31,000. So as a good student now, you have seen how we can be able to do the balance sheet, and you need to actually classify according to what we have done here. Thank you for watching. In our next video, we are going to look at the balance sheet equation and the effects of each transaction on the balance sheet. How a transaction will affect one side of the balance sheet or either side of the balance sheet. Thank you.